Hello guys, good afternoon. Today we're going to be looking at the PPI from US and also the unemployment rate that just came out from Australia. How are these looking? Well, yesterday we had the PPI at 10:30 p.m. in Australia, Sydney time. We had the PPI month over month, the core PPI month over month, the year over year, and the core PPI year over year. I'm just going to talk about the both most important, so the PPI month over month and the core PPI month over month. So for the month of June, something very interesting happened on those ones, okay, that I will be digging deeper a little bit below, a little bit afterwards with you guys. And also the unemployment rate just came out 11:30 a.m. into Australia. We have unemployment rate and employment change, okay? But before we go into those topics, I would highly appreciate if you guys could just leave a thumbs up into this video and subscribe to the channel. That's all I'm asking. And if you want to come tonight, well, this afternoon to the webinar will run from 4 to 5 p.m. Australia time, Sydney time. You're more than welcome to come, and it's completely free. That's exactly it. You're completely free. So the way to do it is you join the Telegram. So you go to into the description and you join the Telegram link, and then you will be, as soon as you click there, you will be redirected to the Telegram page, so you can enter into the Telegram and accept the invite. So every Tuesday, Wednesday and Thursday, when we have the webinars, I send a link in there and you can have a look and click into it and come to the webinar for free. Okay, cool. That being said, let's get into the data. So let's get for unemployment rate first in Australia, because it's a bit easier to explain. But unemployment rate has been consistently rising, okay, and that's really not good, because we had a consensus of 4.1%, so was basically 4.1 previously. So what they were expecting is no changes from previously to now, and the actual came in much higher than consensus was at 4.3%, so 0.2% higher than expected. So that is really challenging in a sense, if you get me right. The other part is the employment change. So the employment change is, the consensus was 21,000, and the previous was revised up in a sense, but still negative to negative 1,100. So if we look here, what we got is a 21,000. That's a very huge number. The actual, my friends, came in to be only 10% of what the consensus was expecting, 2,000, okay? So really bad numbers for Australia. When we look to the Australian dollar against the US dollar, it was traded, it was trading some sort of bullishness from yesterday PPI, and now it's really bearish. And exactly what I've mentioned into the webinar yesterday, looking to trade bearishness into the Australian against the US dollar. So I continue to believe that the Australian dollar is a very bearish currency, at least into this moment, and most likely we can continue to go. Now we're trading at 65, around 65 to 64,800 and 64,900. Most likely what we can do is 64,500, and then if we break the 64,500, we go to 64 even number, okay? Now, putting back what we had yesterday at 10:30 p.m. was the PPI. And so we had the PPI month over month at the consensus of 0.2%, and the previous was revised up, okay? The previous was revised up at 0.3%, and the actual came in at 0.0, okay? So really no changes into the PPI in the sense of month over month, because it doesn't change anything negative or doesn't change anything positive, but still the same, okay? The core PPI came in to be again at 0.0% from the consensus expectations of 0.2%, and the previously was revised up to 0.4. So pretty interesting how this is going. I continue to believe that the inflation is stickier into the consumer end, but looking at these numbers, we can't, I can't say that it's sticky for the producers, in a sense, because when we look for the producers price index, the inflation is really none. they didn't have inflation a month over month, even core or just nominal. Okay, so still the same. With that in mind, most likely the inflation that we got from the CPI, that is from the consumer side, is something transitionary that will fade it away into the next months, and this will give Fed, so Federal Reserve, a brief room so they can continue to do cuts into the last quarter of this year. So basically the second half of the year, this quarter and next quarter, we probably can expect around 75 base points. Yeah, I'm pretty confident with that release now with the PPI. Pretty confident with that. Now, on the US dollar index reaction, so right now on the US dollar index, we are trading at 98.48. Okay, so 98,500, let's call it to be a simple number. On the first reaction, on the PPI reaction, what we did was we had a bounce all the way down from 48,800 down to 47,700. So 47,700 was the minimum point. And now we just, rebalancing back above the 98, close to 98,500, as they say. So what can I expect from the US dollar is a continuation, but very, we were coming from the 10th day of a bullish day. So every single day was closing bullish. And now yesterday, or, sort of yesterday to today, this whole move suddenly didn't happen anymore. So we had only 9 up rally days, and the 10th day was actually the first bearish day into the 10 days. Okay, so I continue to believe that we can most likely do a transition and continue to go higher into the US dollar index, maybe above 99 now being the next target, and that will definitely drag euro dollar down and pound dollar down, Aussie dollar down, and US dollar yen up. Okay, I don't have much views into gold at the moment. As you guys know, gold has been trading pretty ranging, as I said yesterday, but we did have quite a huge reaction from the PPI yesterday. So coming out from $3,345 all the way up to $3,380 was pretty much the whole move. So pretty much $35 up in less than 5 minutes. Okay, so that was a massive release, but now it's trading back down at 3,345. So it's exactly the same as it were let's say 10 hours ago. Okay, so safe havens like gold, they tend to perform much better when we do have risk on policies. So war is happening, trade wars happening, tensions around the world, and it's not what we're getting at the moment. Besides, we did had Israel attacking Syria. But that wasn't a major, because it was a very conducted, and only one place was damaged. That was the defense of the Minister of Defense was the target of the attack. Okay, so gold most likely will be ranging until we break either below or above the resistance or the support. Now, my preferable trade is still euro dollar short, GBP US dollar short, Aussie dollar short, and US dollar yen longs. I hope I could help you understand a little bit more about those releases that we had today and yesterday. Yesterday USA, today Australia. If you have any questions, please bring those questions this afternoon for me from 4 to 5 p.m. or we'll be live and treating about exactly what I did today, but much more in-depth, showing the charts, putting my trades on, and showing you how to actually get those opportunities, because the volatility lies a lot of opportunities, and you need to be able to spot these opportunities. The market, it's very fast-paced, and that's what I want to teach you. So come tonight, come this afternoon, this morning, just depends where you are on the world, and we'll definitely be more than eager to help you out to succeed into your trading. Thank you so much. Don't forget to subscribe to the channel, give us a thumbs up, and I see you this afternoon, or I see you in the next video. Bye bye.